Hello everyone, welcome back to Stock Market Meridian. Today is 27th July 2026 and you're watching today's post-market report. After 5 consecutive losing sessions, the bulls finally made a strong comeback. Indian markets opened with a huge gap up and maintained positive momentum, ending the session with gains of nearly 1%. But there's one important level to watch. The Nifty 50 missed the crucial 24,000 psychological level by just around 4 points, closing marginally below it. So what triggered today's strong recovery? And more importantly, can this bullish momentum continue? Let's break down all the important updates. Coming to sectoral performance, almost all major sectors closed in the green today. The only exception was the oil and gas sector, which ended almost completely flat. One major reason was the sharp decline in crude oil prices. Lower crude prices generally benefit oil marketing companies because their input costs come down and marketing margins can improve. On the other hand, lower crude prices can negatively impact oil exploration and production companies, as their realizations may come under pressure. Now, coming to the most important geopolitical update. One of the major reasons behind today's bullish market sentiment was the easing of geopolitical concerns. Donald Trump paused strikes on Iran and indicated the possibility of negotiations, which created expectations of de-escalation and supported positive sentiment across markets. But there is an important contradiction. In an official press briefing, Iran's foreign ministry spokesperson Ismail Baghi addressed reports regarding diplomatic contacts between Iran and the United States. According to Baghi, there are currently no negotiations taking place between Iran and the US. He also clarified that Iran has not requested the restart of talks with Washington, strongly rejecting suggestions that Tehran was seeking negotiations. At the same time, Iran confirmed that there has been no change in the situation surrounding the Strait of Hormuz, maintaining its position that the strategic waterway remains closed. The Iranian Foreign Ministry also claimed that the US administration is struggling with its regional strategy. So, the key point for investors is this. Markets are currently reacting positively to expectations of de-escalation, but Iran's official statement suggests that significant uncertainty still remains. Any fresh development involving Iran, the United States, or the Strait of Hormuz could once again create volatility in crude oil and global equity markets. Before moving further, if you're new to the channel, don't forget to subscribe. Every morning before the market opens, I upload a detailed pre-market report, and every evening after the market closes, I bring you a complete post-market report. So make sure to subscribe to Stock Market Meridian and press the bell icon so you never miss any important market updates. Now, let's continue. Now, coming to an important update from India's defense sector. Drawing strategic lessons from recent global conflicts and Operation Sindoor, the Indian Ministry of Defense is overhauling its procurement framework to rapidly deploy advanced unmanned systems. Defense Secretary Rajesh Kumar Singh highlighted that modern warfare is increasingly dependent on precision unmanned platforms, long-range standoff weapons, and autonomous systems across land, air, and underwater domains. To keep pace with rapidly evolving technology, the government is implementing fast-track procurement procedures and rapid trial systems to quickly induct low-cost drone equipment into the armed forces. Following Operation Sindoor, the Ministry of Defense issued emergency procurement orders worth nearly 31,000 crore rupees, with a major portion reportedly directed towards drones, counter-drone systems, and lightweight radars. At the same time, structural reforms have significantly expanded private sector participation in defense manufacturing. The number of industrial defense licenses has reportedly increased from around 250 in 2015 to more than 800, supporting greater private sector and venture capital investment. Through initiatives such as IDEX and the updated defense acquisition procedure, the government is also encouraging defense startups and private sector innovation. A portion of the DRDO's R&D budget is being opened to industry and startups, while repeat order mechanisms could help successful technologies scale commercially. For the stock market, the takeaway is simple. Faster procurement, rising defense spending, and a large order pipeline could provide long-term growth visibility for listed defense manufacturers and drone technology companies. So defense and drone-related stocks could remain an important theme to track over the coming years. Now, here's another interesting market trend. According to market data sourced from Ace Equity, foreign institutional investors increased their shareholding in 41 BSE large-cap companies during the June 2026 quarter, compared with the previous quarter. And here's where it gets interesting. Out of these 41 companies, 18 stocks have already delivered double-digit returns in calendar year 2026 so far.
Within this basket, 10 highlighted large cap stocks delivered YTD returns ranging between approximately 20% and 50%. The combination of increasing FII ownership and strong share price performance suggests that institutional buying has aligned with positive market momentum in several large cap companies. Tracking FII accumulation can therefore be useful for identifying where institutional investors are building conviction. But remember, FII buying alone should never be treated as a buy signal. Fundamentals, valuation, earnings growth, and risk should also be considered.
Do you hold any FII-backed large-cap stocks in your long-term portfolio? Let me know your top picks in the comments below. And smash that like button if you're finding this video useful. Now, coming to an important corporate update from Inox Green. The NCLT Ahmedabad has granted final approval for Inox Green to acquire Windworld India's entire operations and maintenance division. And this is a significant acquisition. The transaction adds approximately 4.5 gigawatts of operational wind assets under management to Inox Green's business. Following the acquisition, Inox Green's overall renewable O&M portfolio expands significantly to around 13 gigawatts. More importantly, Windworld's O&M business generates approximately 600 crores in recurring revenue. For comparison, Inox Green reported an FY26 standalone top line of approximately 426 crores. So the acquired business is substantial relative to Inox Green's existing revenue base. The acquired portfolio also includes major corporate clients such as Tata Group, Renew, Greenco Group, Apraava Energy, and Hindustan Zinc. Adding a 4.5 gigawatt portfolio with around 600 crore of recurring O&M revenue could significantly strengthen Inox Green's revenue scale and improve long-term cash flow visibility. This makes the acquisition an important development to track for the company. Now let's check some of the important quarterly results announced today. Starting with Tata Power, the company's revenue improved both year-on-year and quarter-on-quarter basis. However, EBITDA and net profit declined on a quarter-on-quarter basis. Margins also declined on both a year-on-year and quarter-on-quarter basis. So overall, despite the improvement in revenue, weakness in profitability and margins makes Tata Power's numbers disappointing. Guys, if you're finding this video useful, don't forget to hit the like button. Your support motivates me to work harder and bring you these detailed market reports every day. Next, Canara Bank. Revenue and net interest income declined on a year-on-year basis. However, most of the remaining key parameters improved on both a year-on-year and quarter-on-quarter basis. Overall, Canara Bank has reported a healthy set of numbers. Next, Bharat Electronics Limited or BEL. The company's revenue, EBITDA and net profit improved on both a year-on-year and quarter-on-quarter basis. However, margins declined on both a year-on-year and quarter-on-quarter basis. So overall, the headline earnings growth is positive, but margin pressure remains an important concern. The numbers indicate mixed underlying business momentum despite strong earnings growth. Next, Gravita India. The company's revenue and net profit improved on both a year-on-year and quarter-on-quarter basis. EBITDA improved year-on-year but declined on a quarter-on-quarter basis. Margins also declined on both a year-on-year and quarter-on-quarter basis. So overall, Gravita India's results are mixed, with margin pressure and sequential EBITDA weakness making the numbers somewhat disappointing. Next, RR Cable. Here, the picture looks much stronger. The company's major earnings parameters showed strong improvement on both a year-on-year and quarter-on-quarter basis. Overall, RR Cable's results indicate strong business momentum across its cable segment. This is one of the stronger sets of quarterly numbers in today's result announcements. And finally, Housing and Urban Development Corporation or HUDCO. Most of the company's major financial parameters improved on both a year-on-year and quarter-on-quarter basis. However, net profit and net profit margin declined sequentially on a quarter-on-quarter basis. Despite that sequential weakness, overall HUDCO reported a good set of numbers. So that's all for today's post-market report. After 5 consecutive losing sessions, Indian markets finally staged a strong comeback with gains of nearly 1%. But the Nifty 50 is still marginally below the crucial 24,000 level. While geopolitical developments involving the US, Iran and the Strait of Hormuz remain key factors to monitor. So the next trading session could be very important. If you found this video useful, make sure to like the video, subscribe to Stock Market Meridian and press the bell icon for daily market updates. I'll see you again in the next detailed pre-market report before the market opens. Until then, thank you for watching. Signing off, Jai Hind, Jai Bharat.